Hey, sorry about that. Had some problems with StreamYard and well, now we're live. And that's what happens when we're live. Things just don't work. But anyways, Canadian crypto investors, I've got a heads up for you today. Trying to file your taxes early? Well, you better hold up because the CRA system isn't ready for your capital gains and losses. Good news is you've got now till June 2nd to file and report those capital gains and losses. That means more time to optimize your strategy and avoid those last minute scramble. While you're at it, tell me what's your biggest crypto tax headache this year. Drop it in those comments below. This is the Crypto Tax Survival Guide live stream. There are going to be 4 of these live streams. I'm going to be doing it every week for the month of March, every Thursday at noon Eastern, 9 Pacific. And today I am helping you with your crypto transactions to get them in order in a stress-free way. Did you report all your crypto transactions this year? Don't worry. I know that for most investors, reporting and tracking is such a nightmare. Multiple wallets, dozens of exchanges, staking rewards, airdrops, and when is time to file, most people either under report or overpay. But tracking your crypto taxes doesn't have to be overwhelming. And today I am going to show you exactly how to organize, track, and report your transactions so you don't end up paying more than you have to. Now, if you've ever wondered, how does the CRA even track my crypto? Do they know how much I have? Do I really need to report if I never sold? And how do I get this organized without losing my mind? Well, then I want you to stick around because in this live stream, I'm going to make tax season a whole lot easier. So let's dive right in. Hi, I am Charlene Tessier, your Canadian crypto tax expert. And remember, this video is for educational purposes only and does not constitute financial, tax, or legal advice. You will find that full disclaimer in the description below. Okay, let's get started with the first big question that everybody always asks me. And does the CRA even know about how much crypto I hold? You know what? Not yet. But this is going to change soon. By 2026, they're talking about CRA requiring mandatory reporting for Canadian exchanges. And that means if you wait until then to get your records in order, you could be really scrambling. Even now, the CRA has other ways to detect your crypto transactions, like when large deposits go into your bank account from a crypto exchange. So let's talk about what actually needs to be reported. And to do that, you need to understand about taxable events. Now, not every crypto transaction triggers taxes. In Canada, crypto is considered a commodity, not a currency, and that does affect how it's taxed. So here's what you got to report. If you're selling crypto for fiat, taxable. Trading one crypto for another, taxable. Crypto to buy something else, it's taxable. Earning, staking, mining, liquidity pools, lending pools, rewards, all taxable. Selling those NFTs, taxable. But now this is where people tend to start to get confused. Moving some crypto between moving crypto from one wallet or another, as long as it doesn't change its token form, it's actually not taxable. This is also the case for exchanges. You can move it through as many exchanges as you want without having to worry about it becoming a taxable event, as long as you didn't change that token form. However, if you took that crypto mining or staking reward and you used it to trade or do something else with it, that's actually taxable again. Now, I know that this is really confusing and that there are so many different things that are taxable triggers. So I actually have for you a cheat sheet. It tells you what's taxable, what's not taxable. The other thing you also need to know is it capital gains or business income? Yes, there are 2 different types. And the same token can actually be double or even triple taxed. And if you are interested in getting my cheat sheet, just drop a comment below saying cheat sheet, and I will send you that link. It is currently being made, and it's going to help save you tons of hours and help you with your taxes this season. So let's continue on to how you can track your crypto transactions without losing your mind. And there are 2 ways to do this. The first is you can use some crypto tax software like Coinly or Crypto Tax Calculator. These really work well if your wallets and the exchange you are happen to use have really good API support with those software. However, if the software is asking you to do the following, which is to download the CSVs from the exchange that you are using and upload it to their software, you are going to find out that you're going to be spending hours categorizing those transactions, and it's going to be a lot of work to get it into that software. And that is where it's going to be making it kind of tiring and not really very fun. And that's where many crypto investors give up. And this is especially the case for Canadians because the software like Coinly and CTC really support American market, UK and the EU markets really well. And so many of the Canadian exchanges are not well supported by their software. And essentially it's just all manual work, or you'll have to do it by spreadsheet. I don't want you doing that. That is a lot of work and a lot of time wasted. So you tell me in the chat, are you trying to solve this by spreadsheet or are you using tax software? And the tax software does work for some use cases. I'm not saying it doesn't, but if it doesn't work for you, definitely hit me up in the comments and I have another solution for you. Now, for everybody else, there is a quick solution that we can go through right now today to help you get started. Even if you're not using Coinly or any other tax software, this is going to make your life a lot easier. Why? Because you're going to have a snapshot. And once you have a snapshot, it's actually pretty quick to then get all the records that you need. A few more little caveats, actually, I should give you. And that is any crypto tax software, Coinly, CTC, anything that you use has not gone through what's called a Canadian audit process, like a QuickBooks or a FreshBooks or other accounting software. Therefore, they do not consider any record in there as a formal record. Why? Because you can actually manipulate the records however you want. So what's the final record that they want? If they ever do call you up for an audit, which are raw CSV dumps from the original exchange or wallets, that's all they want. They will not accept actually from, you can provide it, but they won't accept it because you could have manipulated the data from any of those software. So just a little caveat there. The other thing you want to know is, let's start with that. So let's get started with a quick demo of, because I have something that's going to help you, which is called a Rescue Records Worksheet. Now, this is not a complete spreadsheet. This is not a spreadsheet that's going to replace Coinly and do this all for you. What this is going to do is just get you started. It's especially helpful for those who feel like their transactions are just a complete mess and it's just rattling around in your head all night, driving you crazy, keeping you up at night. And so this is going to be your first step to really get started and just get it all out. And then you can take that to a crypto tax expert who's going to be able to help you get to the next step after that. Or you can even use it for your crypto tax software, whatever you want to do as your next step. But this is really the first step that's going to help make things so much easier and just kind of unburden you from the stress. So this is a free worksheet. I'm going to give it to you. The link is down below. You can grab it. I think you can see it here. Let me see if I should get it a little smaller, maybe. Oh, it gets cut off there. Okay. So anyways, this is just a demo on the first sheet. You make a copy of it, and then you have a second sheet, of course, where you're going to put your own records just on this sheet. So it's obviously blank. I'm just going to walk you through here. Now, reminder, this is only a snapshot, but what it does is it helps you start really getting everything down. And it doesn't, don't worry about the year exactly if you don't know. Just put as quickly as possible everything that you know, which exchange, and preferably what type of activity. So you could actually have the same exchange listed multiple times for different types of activity. So you could have Coinbase trading, Coinbase mining, Coinbase whatever, swapping, or whatever you're doing there if you're doing multiple different activities. The reason that it's important to have the activities is because that is actually telling the accountants what's the taxable event, is there a taxable event, and possibly is it capital gains loss or business income. Just knowing the exchange itself is not super useful, but knowing exactly the type of activity you are engaging in is really going to help reduce the amount of work and unburden you a bit. The reason to know the exchange or the type of blockchain or the name of the wallet is to help you be able to retrieve the data, or for the accountant, or to get it into your Coinly, right? having API access to as many pieces of software as quickly as possible is just really reduces the amount of load for everybody. And so you need to pretty much know where it was. I am going to talk. I know there's a question that's probably rattling in your mind right now. Is like, whoa, what if I'm using something that's now collapsed and we're going to, or something else, that exchange doesn't exist or something else happened to it, right? Don't worry. I promise I'm going to get to that question right after. Then the next thing you want to do is just put the approximate amount of transactions that you did, right? Did you do 500 that year? Did you do 1,000? Did you do 50 or 10? Again, you don't even have to look it up. Just whatever you think. If it's wrong, it's okay, because later we can check and get that exact number. It's just really quick dumping out everything out of your mind. Now, the other thing is, and like I said, is this a data source available? Yes or no? Or do you actually have to request some of these exchanges? Actually, if the data is especially old, you have to put in a special request and you need to wait for it. So you will want to definitely start doing that. And then you could put notes about things that you were doing on those exchanges or what you plan to have been, what you were doing and whatnot. Oh, okay, great. Thanks. Hey, Josette, thanks for coming and showing up. So now let's get to the question. So that cheat sheet, the rescue worksheet is actually already available. It will be in the description link. You can grab that right away. The cheat sheet, I'm just about finished with that. I realized a lot of people were confused about what were the taxable events, as well as whether to put it as capital gains, business income, or possibly both. I know that's a tricky one. We'll talk about that next time. But for today, we're going to just stay on getting organized with our records. Now, let's talk a little bit about what happened if actually, before forgetting, what happens if the exchange you use actually no longer exists or went bankrupt? So there's a few different scenarios. There is the Celsius bankruptcy, which happened fairly recently and actually is kind of one of the first ones I've seen to actually pay out back to investors some reimbursement. Not everything, but they got some, which is great because, to be honest, I've been around here a long time. I've been in crypto since 2010, and I've seen it crash, and I've seen many exchanges collapse during my time from Quadriga to FX. And so generally it's not claimable because you didn't keep the records. A lot of investors don't keep the original records from that exchange. If you did, you do have an opportunity to actually claim those losses, but so many didn't keep records. And so without a record for audit purposes, unfortunately, most of the money is lost. So, but that's not always the case. It could be that it is claimable. I can't say for sure. I would have to actually talk to you because everybody's use case is different. But if you do have gaps where you are possibly even don't have the records anymore, to be honest, this is really, really, really common, especially in the very early days, or even I would say even predating 2020, even 2022, anything before that. People just don't keep good records. They don't know that they have to keep the records from the original exchange, and nobody knows when it's going to collapse or close down, right? And so since we don't know that, people think, yeah, I'll do it later, do it tax time. And the next thing you know, it's gone, it's collapsed. So there is no data once it's gone bankrupt. Celsius is an exception. Letters were issued, refunds and reimbursements were issued for part of it. So talk to me about that. I have a video on YouTube specifically if you are impacted by that. And I'm working with a lot of clients to help them with their capital losses and the adjusted cost basis for their particular reimbursement. I'm not able to do a specific video because, again, everybody's use case for that is very, very different. So that is what you will do. Now, if you are missing some transactional gaps from exchanges that no longer exist and you cannot get the data, you can report what you can. You can also pick up from where possibly from before and after, and we can kind of deduce. Again, it's easy if you can talk to somebody who could help you with that to kind of piece that back together. There are ways but I wouldn't stress about it. I know that is the major stressor for majority of crypto investors is that, oh my gosh, I'm missing data, and now the CRA is probably going to go after me. And, that's not really the case, to be honest. To let you know, the CRA is actually pretty forgiving, especially with crypto. It's really about, because right now it's really about, it's an honor system. So if you need to amend any past years, they would appreciate that. That way you won't be subject to any audits. If you happen to have crypto and report in 2024, but you never reported prior to that, it could cause some penalties, audits, interests on your past taxes. However, you can amend those taxes proactively, and often there won't be hardly any repercussions for that. So keeping those records as soon as you can, getting them in order this year if you really can, is really, really critical, as well as speaking with a Canadian crypto tax expert who really can understand your case and minimize your tax load. So if you found today's session very useful and it's got you thinking about, what should I get started with? Remember, I've got those 2 resources here for you. The first is the taxable cheat sheet. Just drop a comment below asking for that cheat sheet. Just say cheat sheet, and I will give you that link very, very soon. And the other, which you can grab right now, is my Crypto Records Rescue Worksheet. It's a little bit of a tongue twister. And you can grab that now and just get started. If you have any questions, I do respond to all of my emails, DMs on LinkedIn and YouTube personally. It is not an assistant. So I will be there to help you and answer your questions. And since this is a live stream, of course, I want to hear from you. So if you have any questions, let me know in the comments, or if you want, direct message me privately. I will personally respond to all of them, and I may even cover your question live next week's session. Again, don't forget, next Thursday, I'm here at 9 a.m. Pacific, noon Eastern. Mark those calendars, and of course, bring your questions. Till next time, here's to those crypto profits minus the tax stress. I'm Charlene Tessier.